Hi and welcome to the Luxembourg Private Equity and Venture Capital Stories, and this time it's a sequel. My guest will be Pascal Bouvier. He's managing partner and also co-founder of MiddleGame Ventures. Hi Pascal.
Thank you for having me, Stefan. I look forward to your questions.
Absolutely, it's great to have you again. And as co-chair of our VC club, you have done so much, and you will also be part of our next magazine, so as a cover story. And that's why we thought it would really make sense to ask you also a few questions concerning the market.
Shoot, I may have answers.
Let's go down. So exactly, concerning the listed tech stocks, I mean, we saw, okay, they went down recently, Nasdaq minus 33%, and also lots of layoffs. How do you see the current situation of the market? And also, do you think that we have reached a decade low?
We probably have reached a low if macro factors do not move or deteriorate further. It seems that the consensus now, whereas yesterday it was, we're going to enter a recession in the US, that we may not, or if it is, it's going to be very, very mild. And that by Q4 of this year, the Fed will be more accommodating than it has been. So if that holds, and the U.S. economy seems to be, heating but not overheating and not stalling, then we have had a low, and we've digested that low in the aggregate. What it could also mean is that like certain listed stocks may deteriorate further, because their specific micro, the issues are not as good as there should be. And so that's quite important to understand, right? The sentiment and the perception is still cautious. It hasn't turned positively cautious, still cautious. It may stay cautious and we will have had our low. But we may have some negative surprises on like either a few sectors or a few of the listed stocks.
Okay, so caution will be important. What's your view on the current valuations of those tech firms, be it listed or unlisted?
Yeah, so we definitely have a correction, right? Any technology business, whether it's on the social media side or whether it's SaaS business models, have decreased by anywhere from 15% to 70-80% for some of the weaker ones. And so I think, again, I repeat myself, it's I think somewhat appropriate, right? We've gone back to earth with the interest rates the way they are. And for unlisted technology assets, those startups that are either early stage or late stage, what we observe is something similar, but not every startup is treated the same, right? So the more mature ones, if they don't show commercial traction, have had their valuations slashed. Or they have had the foresight of slashing themselves their valuations, right? Sometimes by 40, 50, 80%. And that probably has gone less so when you get startups that are earlier stage or less mature, right? So you may start with like D, E, F rounds, super mature startups that are still private, that haven't gone the IPO way, that went down by 50%, 60, 70 plus percent. And then when you go to C and B, it might be 50, 40%. And when it's A, it might be 15 to 30%.
Okay.
And then when these are like seed and pre-seed, actually across the board, and specifically in fintech where I invest, valuations have been flat or actually slightly higher by like 2 or 3%. And that's quite normal because there's still a lot of money out there. You've had a recycling of expectations and a resetting of expectations. A lot of mature startups that had raised at very high valuations have suffered. But you always have new batches of startups of new computing or technology paradigms that are interesting, and people are investing in those. And those valuations have remained somewhat flattish or slightly higher than last year.
Okay, that's kind of reassuring, if we could say so. And what could accelerate the recovery? of those who lost really?
So my first assumption is that the stock markets have stabilized, right? In some instances, gone up slightly on the expectation that the inflation is not going to be as bad, or we are not going to have as much of a recession, or the decreases are fair enough. And that means that the portfolios of investors, right, limited partners in funds like ours, like venture and private equity that invest in private assets, have stabilized, which means that they're able to see clearly and not think like beheaded chickens, and start continuing to deploy to new funds, existing funds, for like new vintages. If that stays and holds, right, and if the stock market doesn't crash, again, the macro aspect, it probably is not going to, famous last words, then that will help buttress whatever valuations that we have out there, right? That's number one. Number two, there's obviously a lot of talk about what is the next sexiest thing in the absence of cloud computing and APIs. That is not the sexiest thing anymore. It's the mature thing, right, to deploy on. And in the absence of crypto, because we're in a permafrost winter, we'll get out of that at some point, but I don't know when. So could it be generative AI and all the new technology advances in artificial intelligence? It seems so, based on the early goings of the new advances for that particular technology and the excitement around it. And that could accelerate, deployment of new capital. Especially when these new technologies, when they come in, are being tested, A/B tested by a lot of startups. And then there's new startups that come in. They don't need testing. They basically are going to build a new business proposition off of that new technology. And I don't see that faltering at any point in time, because it seems that there's some staying power behind these technologies, even though there's a lot of hype, but the hype is quite normal. And so that probably is going to help with a slight acceleration. You have sovereign wealth funds that haven't retrenched and that continue to support the GPs that they have invested in to help their own ecosystem. So that's a third aspect that is going to help with accelerating things. And then the last piece is if you have the IPO window that starts opening up, mostly in the US, and there are early hints that may be the case, because there are a few very mature startups that kind of delayed IPOs. At first they said, well, we don't want to IPO, and we'll delay for however long. And then they said, oh, we may want to IPO, but then the window was closed, so they couldn't. But if, by the end of this year and the beginning of next year, you have a few IPO events, that's going to provide liquidity, that's going to get recycled, and that's going to help further with new investments. So that's kind of my 4 things.
Okay, excellent prognosis. And based on your view, are the fundamentals of your favorite sectors still intact? And what is a little bit the performance we could expect over the next months or years?
Yeah. The first, obviously, we invest in the financial services industry, right, in fintech startups. So the long-term trend of, we're almost at 10% or 12%, at least at the very beginning, or the end of the beginning of digitization of the industry. And there's a long way to go. That's still there. That's intact, right? Whether that is done with the tinkering and the innovation that we've seen in decentralized finance, with blockchain, smart contracts, and in the crypto space fully, or whether we're going to have generative AI in the mix or something else, that remains to be seen at the margin, but the full digitization will happen at pace. So I expect several sectors of the financial services industry that are somewhat behind, for example, retail banking or insurance, and specifically, I mean capital markets and asset management. The buy side, the sell side, anything that happens before, at, and after issuance of any type of asset, to continue investing in digitization, to continue seeing startups that solve specific solutions for the funds industry, for capital markets actors that we and my colleagues that invest in fintech startups are going to be interested in. And that's going to be the story for the next 6 years, no matter what.
Excellent, because that was also one of our questions, why investors should continue investing right now in this specific context into technology, startups, and certainly also VC funds.
Yeah, well, I mean, right, I'm going to provide a schizophrenic answer, right? There's one answer, which is you're already an investor with like a seasoned fund that was like 5-6 years old, and you've really suffered because valuations have gone down. So it's going to be a bit tough for you because you may not have like enough dry powder, and then you have to go out and raise. But if you have young funds, or if you're raising or finishing raising right now, and you're getting into investing over the next, let's say, year or 18 months, that's a great time because you get fantastic returns 5, 6, 7 years after a reset in valuation, after a crash in the private markets. And just for that cyclical reason, it's very good to invest now. The second micro reason is, I mentioned the digitization, as well as applying all the learnings and all the new technologies that are being built around generative AI in the financial services industry. So I would say those two reasons.
Okay, great. You also highlighted a few of the hottest technologies or trends before in one of your answers. While keeping that in mind, do you think that ESG and technology are incompatible? Is it an utopia to combine those two worlds and words?
Yeah. So it's important to differentiate between a trend and or a theme, right? And how investable that trend or that theme is for a venture investor or a private equity investor, right? And so is ESG a trend? Will it marry with basic foundational technologies? The answer is yes, because there's a legislative and regulatory fiat that is going to make it so, at least in the European Union. And usually the European Union is the locomotive from a regulation and a legislative perspective that kind of like pulls other geographies, right? Once things have been decided and the industries follow. What's less obvious is ESG as a trend investable for a venture investor
exactly.
like me? And I can't give a definitive answer. I can say that it's so far quite difficult because we've been looking at a lot of ESG startups. Some are quite attractive, but we haven't made an investment yet. And we are trying to figure out how much sustainable power there is behind these business models, and if large incumbents that are in data analytics and that are in the reselling of data are going to invade that space without giving much space to startups that are in the ESG sector. So I think that's debatable. I know of like a couple of other investors, peer investors of mine that have made a lot of investments. We've shied away from that so far.
Because we all heard about those clean tech investments, energy efficiency, consumption, etc. Yes.
And if you look at the history to inform yourself, obviously not like repeating history, but like, green tech of like 10, 12, 15 years ago did not work well at all for venture investors and for the LPs in venture funds, right? It was somewhat disastrous from a returns perspective. However, there's a lot of like green tech that came out of it, right? That has been adopted by municipalities, by states, by industry because they have to from a legal perspective, right? But from an investment return perspective, that was not particularly good. So are we doing a repeat with ESG? ESG being like repackaged somewhat differently with like add-on layers of like thinking and innovation and requirements. And the investment piece is going to be disappointing. I think that's a question that we're wrestling with at MiddleGame Ventures. And we probably will answer it definitively within the next 18 months. I.e., we'll make 1 or 2 investments, or I'll come back to you, Stéphane. I'll say, hey, I found some really interesting ones, and yes, definitively, from an investment returns perspective, there's a great marriage. Or we couldn't, and we couldn't convince ourselves of that.
In any case, we'll gladly relay that information or those deals. Thanks a lot, Pascal, for all your insights, for sharing your perspective, and for being here again, once again, one of our guests of the different interview series.
But thank you very much.
It was really a pleasure.
I appreciated it.